What's up, everybody? Hey, it's a new week, and you know what that means? It's a new show. Welcome to this week's edition of Black Box Beat. I'm Kang.
I'm Maria.
And I'm Hills.
All right, y'all. Let's get right on into it. What do we see going on this week? What you looking at, Hells?
So it's like I think just to take a step back for Angrata, that's it. It's like they will not history will not write about them very well, considering that they're the ones in a lot of ways that caused a lot of this shenanigan in the first place. Just to your point, I just felt it was fair to put out there.
No, I'm with you. I'm with you. Yeah, I mean, for me, what I'm kind of watching, it's just for those Jeopardy, old school Jeopardy watchers, I got just potpourri today. That would be the category that I would choose. So just kind of a smattering of different things. Um, for me, it's, we're on the cusp of this summer trading season. It's honestly, it's not one of my favorites because it's always thinly traded. It's just kind of bleh. Sometimes we're sitting there all like, man, well, things just move. So summer is going to be here, obviously thinner volume. I'm not expecting too much out of it. Doesn't mean we can't get range. I hope we do. I hope it's not just kind of, the pre-COVID summers that we were used to a few years back. But one of the things that I just wanted to mention too is this consolidation that we're seeing on the dollar. So this is one thing that I'm going to be watching just to see which way it breaks. So you've got some pretty good, well-defined support, and also you're putting in a series there of lower highs. And so I think this once we get out of this compression, and who knows really when that's going to be, but once we get out of this compression, it's just something that I'm watching on the dollar, and that could be something that helps move us in the markets. Also, another thing that a lot of people reach out, or I see people talking about, is the VIX, and we are at some really low levels historically on the VIX. And the front, just to kind of highlight a couple of things. Number one, the when everybody is referencing the VIX, you're talking about that front month contract, and it is really low, right? It is pretty low. Right now, the market just is looking at that complacent. It's kind of like looking at a pond, no wind blowing, no nothing, no ripples, right? It's just very kind of placid. But one thing that I like to look at right here that's up on the screen is those contracts that are out a few months. So the front month contracts, always looking at 30 days. But I always like to look at these contracts that are out like to the fall and even into the beginning of next year, because that kind of shows you what kind of volatility the market may be pricing in. So for right now, we might be at, some pretty low levels. But if you take a look out to, like September, October, November, then you start to see things in, like 18, 19, 20. And again, that just means that people are willing to pay up a little bit more for those, for that volatility out in time. So that's just a few things that I like to look at.
I agree with both of you. I think you both have really great points. The market is definitely resilient, and we are in that summertime trading environment where we've got to be more patient. We've got to be more selective. Things are a lot more thin. We may not get the range that we like getting or are used to seeing. So it's just, again, and I know we constantly beat this point over and over and over, but you have to be patient. You have to be patient, 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 and that is the key, especially for this kind of time period.
Yeah,
Mm-hmm.
I think that dollar chart that you put up is really interesting, Kang, because it's like the data has been worthy of the dollar pushing higher, right? It's like the dollar moves higher off of good data. So the dollar is being, I don't want to say it's being suppressed, but I think it's more in line with the strength in the JPY. It's like you have that strength coming out of Japan. It's like that is keeping the dollar somewhat suppressed because that's the hot ticket right now. And going back to the Fed, they printed just as much, if not more than us per capita, per GDP in relation to GDP when it came to stimulus. They did not raise rates. They refused. Their argument the entire time was it truly was transitory. That was their take. Inflation was, and that they were more concerned about deflation than inflation. Right now, the BOJ are looking like absolute rock stars, and we're looking like a bunch of dumbasses that are sitting there chasing our tails. Like when you really, really look at the results at the end of the day, the results are the results. Their markets are at 30-year highs. Their currency is strong. Their data continues to be good. And we're sitting here once again, literally chasing our tails because we continue to kind of inject some type of policy just to back off a few months later, we don't let anything play out and actually work. So again, here we are. It's like we're having a nice run in the market. It's very very nice, but that dollar thing, I think you bring up a very good point. It's basing. It's gonna go somewhere.
Thank you, sir. Yeah, definitely something to watch because that one can move markets for sure. All right, folks. So let's get on into the next segment here. Let's talk about where that money is flowing. What are y'all seeing out there?
Well, I know at least for myself, and I know Hells is going to agree because I know he's seeing the same thing. Um, we are seeing movement into some of our tech names, which I absolutely love. Travel is another sector that's seeing some, and I know Hellsbells will say the exact same thing. And there are a select few that we're actually seeing a little bit of buying with time, so that is great, especially when we're running into a time where things are a little bit slower. So I'm curious to see what else we get over the next couple of weeks.
Yeah, no, I think you nailed it. It's like the travel piece of it is really interesting. The flow that's been coming in into airlines. I think Delta got an upgrade here recently. We saw Carnival Cruise post really nice numbers, and if you look at a 5 year chart on that, it's basically still after this little run up against 5 year lows for the most part as far as CCL. There's a lot of move to the upside, and if you look at some of the data surrounding consumer spending, while they are not, it's like what we're seeing, at least from this is so wild. It's like you go back and you look at General Mills, how they reported today. It seems like a lot of people are really, they genuinely are trading down. They're not going for the expensive brand stuff. They're trading down, trading down. They're really watching their pennies. But what the spending is indicating that they're coming in and they're buying tickets. They want to go to cruise lines. They want to go to concerts. They want to have experience type stuff. And they're willing to go ahead and be like, you know what? I don't need the expensive corn in order to do that. I don't need the expensive beans to do that. So they're trading down in a lot of ways, and that's coming through on the flow. Banks are the one things that I really want to see some type of activity. We do get the bank stress test today, comes out this evening. Very curious to see how banks kind of react to that. Powell reiterated again today that everything looks good, right? Looks good
Mhm.
as far as banks. We'll see how the test comes out. We'll see if we get some flow coming back into those names. But it's, I think, Maria, before today, we saw some activities in the flow that I was just like, this thing is going to go up until forever. And I think today
Right?
we saw,
It's not forever.
it's like, and then today we saw a massive amount of deep in the money call writing on SPY. Some of that could
Yeah.
be to lock in gains, but that type of activity, no matter what you want to call it, is not bullish. That is not bullish activity when they're writing deep in the money calls. It just isn't. And we
It's
saw
not.
what almost $6 million 187.50 call being written on Apple. Again, to talk about Apple a little bit, you're talking about a company that is popping ATH after ATH on a daily basis with shrinking sales year over year.
Yep.
Right?
Yep.
It's like, just think about that. Shrinking sales year over year, but you're going to pop ATH after a all-time high off all-time high. There's some pieces within here that look like, right, like a potential, if nothing else, sideways cool down. I think the idea of looking for everything to look flow is not bearish. Let me repeat, but some
Yeah.
of that bull edge is fading a little bit. That's what I'm saying.
Yep. I agree with you.
All right, good people. It's that time of the program. We know what that is. Who's shagging, who's wedlocking, and who's killing something. So, Mario, take us away.
Okay, I my pick this week is Amazon, and take a look at that. That is actually today's chart. Yesterday we saw some nice buying into the September 145 calls, well over 3 million into that specific line. We also broke a key area of resistance yesterday, which was that 130-ish area. Yesterday and today, at least this morning. And if you look at the OI, um, from in that specific line in the September 145s, you'll see that most of that OI stayed in there, so they're still holding that. And also, just another interesting line that we saw was buying into the November 150 calls with also about 3 million. So it looks like they're liking Amazon. I like it too. It is a shag for now. I'm in this play, and I'll definitely be keeping an eye on it.
This one is so hard for me. It's like a lot of ways I just want to stay neutral. After the General Mills report, I just don't see a real way how Amazon reports well. Obviously, you're probably going to be out of this before it reports, but it's like I don't want to say kill it, but it's just like no, I'm not buying you here. Piss off. That's what I have to say about that.
I would just say the consumer, still, hey, consumer still spending. I mean, maybe the consumer side will still do well. I'm not sure about AWS with us potentially going into a slowdown. Some of that capex may slow down, but I like it. I like it. So I'll roll with you, Mario.
It's
All
really
right,
hard to argue with that flow that you just posted. It's really, really hard, but it's just I can't get
it's
my
pretty.
mind around it. It just
I know.
flows there. Follow the money.
It's kind of one of those where it's like it's either going to work or it's not. I think it's going to work. I like the setup. We were at an area where it looked like we wanted to bust through that resistance, and those are at least earlier today they were green. I don't know how they ended the day, but they're looking good so far.
Hmm.
I'm rolling with this is not one that I off trade often, but again, now this I like the setup here on the 4 hour. This is meta Zuckerberg territory. For me personally, it's all about the setup, right? So I'm looking at this support down there around 282, and then you've got resistance around 292. Very compelling price action right here, in my opinion. So as you can see, as we're moving to the right there in the chart, we are compressing, and that volume is, to me, on some of those longer time frames too, is looking nice in terms of that compression. So I don't necessarily have a position in it yet, but I just wanted to call attention to it because that 282 on the lower side, 292 up there to the upper side is what I have my alert set at, and I'm ready to pounce when this thing breaks. So I like meta, just kind of waiting it out right here on the 4 hour.
I think that's one of the more ideal charts to keep on watch, considering it's trading right into the middle of that range, gang. It's like you really could flip a coin on it as far as which way it's going to go. One thing about it, I have not seen really, really bullish meta flow coming in, but I certainly haven't seen bearish flow either on meta. It's been kind of lackadaisical. You'll get these moves where they'll hit weeklies and then back off. I really want to see some nice solid 300. I think 300 calls start banging in through here to be like, okay, let's go. Let's go. You want to throw 10 mil to up into the 300s, 310s out to 2024? I'll chase that. But again, I can't. It's like it is the perfect chart to kind of sit there and watch with it trading in the middle of that channel.
Yeah.
I'm with y'all. It's also a wait for me, but I like it. Either direction, whether it wants to go up and touch the top of your trend line or the bottom, there's opportunity there. What you
What you
got,
All right,
got,
I
Hells?
think
Hill?
I think it's my turn. I'll
Jinx?
just go ahead and jump in here. So I'm still doing the same thing. I'm still in SoFi long, which continues to be very beneficial to me. I mean, Intel long continues to be very good for me. My main issue right now is Bank of America. That trade was supposed to move in a completely different direction. It is not. I'm giving it through the stress test tonight. If the results don't come in well, that's got to be a cut. I still have time on it. If the results come in well and the flow is there, I'll tack on and add it into that ticker to go ahead and see if we can get a run. For me, at the end of the day, I wanted today to be the day to where, you know what, AMD has fallen from 130 down to 107, 108. I wanted to be able to jump in and buy some AMD. They didn't give me the flow. They didn't give me the move. And then I started seeing these large bid side calls starting to come in. And it's like, again, you're not giving me any type of confidence to try to buy the dips on some of these tickers, especially in AMD. I got to wait it out for now. Hopefully next week I'll be able to give some direction, be like, yes, this is what I'm in. This is what I'm doing. This is what I'm looking for. So hopefully next week I can get that to y'all.
I'm good with that.
Nice.
Definitely.
Mhm. Let's go. All right. So, as always, we do love to hear from our members. And this one this week comes from OG, triple OG. You all know him as Charlie. So, what question, Mario, what question did we get from Charlie today?
So the question is, why was this most recent rally so unpredictable and missed by quote unquote most people? Oh, y'all want me to answer first? All right, all right. Why was the most recent rally so unpredictable and missed by most? I think I think this a lot of this falls into traders expectations, right? So rally, 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 and then a little bit of volatility, and then people are like, nope, nope, we're running, running, running. It's time to pull back. So I think a lot of people, they miss out simply because they have a bearish bias, or they're not willing um, to look out, or to ignore everything that's happened and happening and just look at the chart. Does that make sense? So I think bias is a big, big problem. You have people who wake up every day and all they're doing is playing, one direction, which is fine. If you play one direction, that's okay, but they're playing it on uptrend days, right? So that's where the problem is. You can prefer to play one direction or the other. I don't think there's an issue with that, but um, you can't you can't let yourself get into a situation or get into a mindset where it doesn't matter what you see on the chart, you're only seeing one direction, and that's opposite of what's happening.
Well, I think it's possible that this question may have been edited a little bit. I think it's possible. I think I think I think there's a possibility that there's been some bamboozling. Here with the word most, I believe that that's supposed to be media. Let's be direct in what we're talking about here. Just because I like credibility, it's important at the end of the day. The media completely missed this move 100% because they were too busy telling us that we were all going to die. The reality is, mainstream media has a very very direct mission, and that is ratings. They get ratings when things aren't pretty. Okay, they get ratings when things are kind of ugly. That's what everybody loves, a car wreck. Everybody loves a car crash. You tell people that they're going to die. You tell people that there's a recession. You tell people that there's a bunch of people trapped in a submarine at the bottom of the ocean. People will tune in. The media was completely irresponsible all the way through on this run by doing nothing but pushing FUD. Every single day you turn on CNBC or Fox Business, what were they doing? We all going to die. There's a recession. There's a yield curve. There's a this. There's a that. There's a this. Every single day. Not once would they offer a bullish narrative at all as we ran from that 360 level all the way up to where we are now. Now they're all scratching their head going, well, this is crazy. Valuations are too high. This, and that. The media has lost credibility. That's one main reason why the fact that they chase viewers and they're more concerned about their ratings than they are actually getting something right, because nobody will hold them accountable. Absolutely no one. That is my answer, 100%. I'm locked and loaded, sticking to it.
Well, I got 12 seconds to go, so I'll try to get mine in real quick. I would just say the macro, right? I think a lot of people are focused on the macro because you have some yield curve inversions. Leading economic indicators are very negative and have been for I think 15 or 16 months in a row. You do have some things that, if you look at it, I mean, the Fed continues to be very hawkish in the way that they're speaking, and it's a matter of the time frame that you look at. We can rally in the short term. It's kind of like the old saying I always say, bulls can be right, bears can be right. It just depends on the time frame that you're looking at. And I think the macro generally takes a longer term. It takes a lot longer to play out. So we'll see. But I hear the music, folks, and you know what that means. That brings us to the end of our show. Please like and subscribe us on our YouTube channel so that you can get alerts when we go live on Wednesday. So that brings us to the end of this week's edition. Y'all stay green out there. Peace.
Bye, guys.